The news that Russian President Vladimir Putin signed a decree recognizing the independence of the Donetsk People's Republic and Lugansk People's Republic and ordered troops into two breakaway regions in order to maintain peace in eastern Ukraine came as a surprise to global markets. Amid the escalation of the conflict, oil quotes jumped to 7-year highs. The world is waiting for the reaction of the United States and European countries, which are threatening to impose serious sanctions on Russia. With increased geopolitical tensions, hopes for a diplomatic resolution of the conflict are fading, although it's not yet clear what measures will be taken against the country. Given that oil and gas have repeatedly acted as a key pressure factor in the political arena, the risk of sudden oil supply cuts is currently quite high. These concerns have caused a steep rise in oil prices. Against this background, the asset may well hit the level of $100 per barrel. In this situation, there is no point in relying on technical signals, as the news has excited speculative interest. Brent crude oil futures are still testing a new local high, heading for the psychological level of $100 per barrel. The benchmark has every chance of touching this level in the near future, as traders continue to ignore its overbought status. The asset's further movement will depend on speculators. Brent crude oil may extend gains or enter a technical correction from $100 per barrel. The recognition of the LPR and LDPR stirred up the foreign exchange market, putting downward pressure on the ruble. European currencies also began to lose value, but not so significantly. In the shortest possible time, the dollar confidently overcame the mark of 80 rubles. The MOEX, Russia's benchmark stock index, tumbled as geopolitical risks weighed on investor sentiment. Today, we are witnessing a real panic and a serious capital flight in financial markets, which are exacerbated by a sharp increase in speculative activity. The White House announced harsh new sanctions against Russia, and a number of European countries followed suit. Thus, geopolitical tensions continue to ratchet upwards. Given that the ruble-backed MOEX Russia index plunged, the ruble will most likely extend weakness today. The only question is whether the dollar will rise to 90 rubles or its bullish run will hold earlier. From a technical point of view, speculators continue to drive the euro versus dollar pair. Given the rather aggressive and rich information flow, the mark of 80 rubles per dollar can be regarded as just the beginning of a crazy speculative rally. Since market participants keep ignoring the oversold levels and other technical analysis tools, it can be assumed that the currency pair will most likely move further towards new historical highs. In times of instability, traders traditionally shift their focus to stable assets such as gold. However, the precious metals' reaction to the escalation of the conflict was too calm, which is somewhat surprising. A rise in gold futures was rather symbolic. Nevertheless, given the market situation and a flight from risky assets to safe haven assets, gold is expected to extend gains, while the scenario suggesting its decline seems pretty unlikely. As for technical analysis, gold futures continue to trade sideways around the level of $1,900 per ounce. For now, the quote is confidently moving above this level. However, in order for gold to resume its bullish run, the price needs to break through the local high posted on June 1st of 2021. If the asset consolidates above the level of $1,916 per ounce, the volume of long positions will increase. And this was the forecast for today. As you can see, oil is heading for new highs, while the ruble looks vulnerable to new lows. May your trading be lucrative in all situations. Have a nice day and see you back soon.